Hello and welcome to episode 33 of the Craving Crypto podcast. In today's episode, we're going to be talking about Ethereum and why I think it dumped from a technical analysis perspective. So let's get right into this. So what made Ethereum dump so hard? We're going to get into this question in a second, but first let's get into our market overview. So on coinsignals.trade, I actually get this question a lot. Where do you chart the total market capitalization for crypto? And the only place that you can currently do this, aside from coinmarketcap.com, of course, is coinsignals.trade. It's just a website. It connects the TradingView engine to the CoinMarketCap API and loads the data from there. Now, there are some pros and some cons to this. You cannot set alerts, so that's a major con. Thankfully, TradingView actually tweeted at me the other day and one of my other followers on Twitter and let us know that they are adding these charts to their platform, the CoinMarketCap charts. As you can see right here, they replied and said that they added it, but currently it's just a normal chart. You can't actually load it in the full platform and actually set alerts yet. It's just like a image of the chart basically. So, but they said that you're going to be able to add indicators and do your data later. So that's pretty exciting. I just wanted to get to that question because it was our question for the day. Now let's get right into the actual analysis. As you guys know, last week we were watching this resistance level. If we go back to our document here, you can see the last episode's technical analysis, and we just pointed out that there was two main options. Either way, we saw short-term rejection off of those prices, and we were looking for support to be found right here in this range. Sure enough, we had a rejection, and we have landed onto support and bounced. I still see my primary option is the most probable option in this scenario, but if $186 billion in total market cap can't hold, I do think that these $175 billion levels and potentially the $150 billion level could be tested in some type of wick or capitulation event where there's a lot of panic selling in a very short period of time, stopping everybody out and making them sell their positions. So this is kind of what I'm watching, though. I think that we will curl back up right here. It just depends on whether we make some higher highs or not. The MACD is in a squeeze right now. Bitcoin is in a triangle on a major support level. We've had a lot of panic over the past few months, so continuous selling pressure isn't exactly probable at this point. The thing is whenever you have extended selling, there has to be some type of a bounce or rally and a relief from that selling. So I wouldn't be surprised if that's what we see here and creating this option A over the next week. So again, watch these support levels really closely, but my primary is still holding true. Obviously, I just moved this line down a little bit because it meets up with the curl that it had. So but that's our updated analysis on the total market cap. I think that the support will hold, but if it doesn't, we're going to test these lower support levels. Okay, awesome. Now let's get into our question for the day. What made Ethereum dump so hard? I really wanted to talk about this because a lot of top influencers on YouTube, I've just seen lots of people making videos about why is Ethereum dumping and what happened to their beautiful Ether. And you know, they're really, a lot of people really got attached to Ethereum and the trend that it produced and created. So when it drops the other way, they're going to have intense emotions as to the reasons that it dropped, because they want to either justify their investments when they bought too high or whatever the reason may be. Either way, Ethereum has a lot of dumb money, is like we like to call it, and that's not really like a rude thing. That's just a term that we use in trading, meaning that beginners don't know what they're doing, so they make bad investing decisions, and so we call that dumb money. And a lot of dumb money got really attached to the Ethereum trend, which is one of the reasons I think that it dumped so hard, similar to the way that Ripple worked, where Ripple just pumped so hard. A bunch of fanboys came around, Ripple fanboys, and became super attached to the trend. And basically because of that, when it started dropping, they got really mad at the company. Now they think it's a centralized shitcoin. And, you know, although personally, I have nothing against Ripple, I do see some issues with the way that they have centralization set up, and I'm not really a big person as far as liking banks go, but I'm not going to sit here and talk shit on the coin. It's just a market cycle. It pumps and it dumps. This is the way that all charts react. It doesn't matter what it does or where it's from. So let's get right into the actual Ethereum chart, and I'll go over the technical analysis kind of perspective for Ether specifically. Yes, I have been watching these pot stocks very closely, you guys. Every single day I come in here and I check them. Okay, Ethereum Tether. As you guys know, Ethereum has retraced about 80% from its high, so we can just take our price range tool and go from the low to the bottom. And yeah, we had an 87% retracement in its market cycle. Now, altcoin markets often retrace to what's called a 0.88% Fibonacci retracement. That means that it's lost over 88% of its value. And as you guys can see, we had a very, very nice kiss of that 88% support level in Ethereum. And we're starting to get more relative volume. So with volume, it's very relative to the position and the point that you are inside of the market cycle. So because we had dead volume all through this part right here, where we made the C wave down, we're finally getting some relative volume to come back into the market. So that's a good sign. Over here, obviously, there was a lot of volume because we were in a raging bull market. So you can put that aside and consider, since the beginning of the correction, what does our volume look like? These big volume spikes right here was selling volume, people taking profits. And then this right here would have been some buying volume. But again, we just had another sell-off, made a new support level, and now we're finally getting that volume to pick back up. This is an ABC correction that we've had in Ethereum. If we just take our Elliott wave tool over here on the left, you can draw an A wave down, a B wave back up, and a C wave back down here. So ABC correction is one of the only trading patterns that you can have a 70% probability of it playing out if your wave count is correct. So that's one of the things with Elliott wave theory is you want to count your subwaves, make sure that your Fibonacci rules are meeting up properly, because if you can get your Fibonacci to meet up and then you can get your subwave count to meet up, you know that you have a good count, which gives you a high degree of confidence that you have that probability in your favor. So as you can see with Ethereum specifically, an ABC correction has 1, 2, 3, 4, 5 waves down, ABC up, and then 1, 2, 3, 4, 5 wave down as the subwaves. So we can go ahead and label these 1, 2, 3, 4, 5. Now in a bearish trend, these waves can actually eat into each other a little bit. So it's not an issue that we have some bleeding between the 3 and the 4 wave. And then you can see that we had another 1, 2, 3, 4, 5 down. And obviously this was an ABC wave up as well, A, B, C. So that's an ABC correction. Those are the subwaves inside of it. And again, we're retracing back onto that 88% Fibonacci support level. So that's lining up really nicely with our market cycle analysis and the relation between Elliott waves and Fibonacci. Overall, I see this previous impulse as a 1, 2, 3, 4, 5 wave. Originally, I saw this as a 1 wave and that we were making a 3 wave, but when we failed this support level at 3,800 per coin, that confirmed that we already had a full 1, 2, 3, 4, 5 wave in place, and that this was a full ABC correction of that entire wave set. Previously, I can just show you I was counting it like this, and I was expecting a 5th wave to come out of this, but because the 4 bled so much into the 1 and then failed as support, we now count this as a 1, 2, 3, 4, 5 wave, and this is an ABC corrective pattern out of that full market cycle. Essentially, when you adjust your wave count like this, I had already taken quite a bit of profits off the table because this was a 3 wave. So it doesn't matter that I'm changing my wave count and that it did a different prediction than what my primary original count was, because I still knew that was a 3 wave, so I still knew that a corrective process would take place. I just didn't realize that it would be a full corrective process of its wave. I knew that it was possible because there's multiple ways to count on the way up, but my primary was that we were going to go for another wave on the upside. So that's just one example of how you have to adjust your wave count sometimes, but because Elliott waves give you the same areas that you can be taking profits, even if it does go in for a different count, you're still getting out at a good time and still accumulating near a good area. If you ladder into your entries, setting buy orders all the way down so you get a very nice average entry, it'll take a lot of the stress off the market dropping and your wave counts changing, because you'll understand that, hey, if this drops a little bit further, you're just getting a cheaper entry. It's not stressful, it doesn't weigh on you. It's a lot more simple in that fashion. So I actually watched Ethereum get added to Poloniex in 2015. So I've been around. I traded this cycle right here. I watched as the FUD came out for the DAO, and I watched the price come right here. And then the ETC hard fork, I traded ETC because it pumped really hard when it got added to Poloniex. So I made some nice profits on that. And then I posted a buy signal on my TradingView, a private buy signal, back when I was a little bit newer to technical analysis and this stuff. In this area, I knew that there was a big reversal in trend. I even shorted it when we got up to this major resistance level at 400, back down to the $180 levels. And so I've been playing this trend for a long time and made good money along the way, these swings. And so I do know Ethereum pretty well and the way that it fractals out. Whenever you have something run up 21,000% in the period of a year, you know, you have to ask yourself, is this going to be able to be sustainable? And so I knew that a correction was coming. Like, I drew an ABC, I posted on my TradingView that Ethereum was in a bull trap in this area right here. But I just figured we'd find support a little bit sooner and curl up for another wave due to my previous wave count. So just purely from a TA perspective, this was overvalued on the short term, needed to do a correction. Now that it's done that correction, we don't know if this is going to be the exact bottom. Maybe there's one more subwave lower in an ether to this next major support level. It really doesn't matter. I have my buy orders casted. This is a good time to be accumulating. I really think that even though there's a lot of dead weight from the ICOs, and even though Vitalik is saying a bunch of really illogical things on Twitter, like how he thinks that the 1,000% days are over, to me that's a buy signal, by the way, that he literally sold, basically panic sold 20% of his entire Ethereum holdings in a dip previously. So I don't really think he's too professional with market cycles. Maybe he has other skill sets. But yeah, so I don't really take what he's saying too seriously. I see this as a good spot to be accumulating due to the technical analysis perspective. And TA has always proven for me to be a way better tool for predicting markets than what people are talking about or the fundamentals or the news. In fact, most of the time you'll get screwed trying to trade on those. So overall, I think that it just played out a normal standard market cycle, got overvalued, needed to correct, fell below its trend line, which allowed all of the dumb money to get shaken out. A lot of people panic sold right here when you had this failure of support. As you can see, it just impulsed down really hard and then made a bearish triangle and did another impulse wave down. So it's shaken out a lot of the people that were, you know, Ethereum fanboys and going all in and moon boys right here at the top. Shook out those people, and now we can get some serious accumulation at these low prices. So that's my perspective on Ethereum, and I hope that that can provide some value to you guys as well. I wanted to run over XBC really quickly, talk about what I'm doing with it. I made a video on Friday about XBC and how you should be accumulating it. Today we got an email from Poloniex saying that they were going to delist it from their exchange. Not really something that I could personally predict myself, but I'm not panic selling my XBC, so I want to talk about how you can play this, maybe how you should look at it. As you guys know, I told you to put a very, very small percentage of your portfolio. I said no more than 3%, and I told you to average in between $15 and $25. So we dropped all the way down to 3 today because of the delisting factor, and it did end up breaking bearish. This was a false breakout of that triangle pattern that I had drawn, and ended up breaking bearish. Now, I had only put a small percent of what I'd been planning to put into this, about half of what I was going to put into this trade, because I'm accumulating just like I told you guys to. So I actually moved my XBC over to a smaller exchange, Cryptopia is the one that I'm using. I wouldn't necessarily recommend this to anybody just purely because Cryptopia is a smaller exchange. So you definitely don't want to put too much of your portfolio on there basically. But I'm not scared to put a few percent, under 3% of my portfolio onto Cryptopia right now and hold my funds there because Poloniex will not allow you to trade this after a little while. So I don't remember what the exact date is, but you can go to their website and check in the announcements board. Either way, I bought a little bit more today, probably going to buy a little bit more in the next couple days. If this does just get shaken out, I take a small loss in my portfolio. I'm not going to be too sad about it, but if this still does what I'm expecting it to, because this wave count shows a 1, 2, 3, 4, 5 wave down in a bigger corrective wave, that triangle pattern that I was drawing in the actual video. This could still easily impulse. There's a lot of accumulation. I bought BitShares right before it was delisted off Bittrex, and right after it did 800% on the upside. So I don't really look at these delisting things as something to be like, okay, this is a reason to never touch this coin again, because often they get delisted at the bottom of their market cycles. A bunch of volume comes in, a bunch of people panic sell, and it would not be surprised at all if Poloniex is accumulating some of this right now. Obviously I don't know that. It's just purely conceptual, but I know that when Bittrex disabled BitShares, it dumped another 20%, and then it went so hard on the upside due to market cycle analysis. And this is nearing the bottom of the market cycle. That's kind of my thoughts there. Go ahead and sign up for Coinigy if you want to do technical analysis on altcoins. You can use my BitMEX referral link if you want to do leverage trading. Not recommended for beginners. And my Bitcoin address right here. If you like what I'm doing, you can go ahead and donate. Last but not least, the VIP course and Signal service link is right here as well. Thank you so much for tuning in today's video. I hope that you learned something. If you have any questions at all, go ahead and drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next videos. As always, stay profitable out there.